Hey Leith, thank you so much for joining me on Land Cycle Investor today. It's so good to have you here. How are you? How are things going?
Yeah, good. Weather's nice in Melbourne. We're taping this on a Monday, so I've just had a good weekend. Feeling pretty good for Monday. Usually when Monday comes around, I'm like, 5 days of working away, blah blah blah, working for the weekend. So no, it's all good. A lot of interesting stuff to talk about.
Yeah, I was thinking about this interview this morning when I woke up, because I did have that reaction to Monday today. I was thinking, like, how long have you been writing macro business now?
I think we're in our 13th year. Yeah. So basically in 2010, I wasn't with macro business, but I was writing my own blog. So I was basically working at Goldman Sachs, bored out of my brain, been there for, 4 years at that stage, and hated my job, but it paid well. So I was staying around. Had a baby child, 2 young kids at home and all that sort of stuff, paying the bills. And then I started doing a blog on the side just to keep my brain sane, and that was called The Unconventional Economist, and it got a bit of traction. And then through that I met Dave Llewellyn-Smith, and he had his own blog called Houses and Holes. And then one day we found out that he actually lived in Melbourne, so we're like, oh, let's go and get lunch. And then we got lunch, and then we said, why don't we merge our blogs into a big blog? We got another guy as well, and we're like, what should we call it? So we just brainstormed some names, and then macro business came up. And then next year we started that, and I've been doing that since January 2011, I think. We launched that with the Demography Housing Affordability Survey in 2011.
Wow.
And that's been, so quit Goldman's a year later, or that year, I think, end of that year. And then been doing it full time from home since January 2012.
Yeah.
So, long time.
The affordability housing study as well each year.
Yeah, that's right. Yeah, it's still going. Actually, I can't remember if it did this year.
January this year?
Don't know. I think I might have missed it if it did. Actually, I don't think it came out this year. Yeah. I'm already losing track of time. It's March, and I'm like, hang on, did I do it this year or was that last year? Yeah. I can't. Everything's just blurring into one. I'm getting old. Starting to lose my brain. I've lost my hair. The way it goes. A lot changes.
A lot changes, yeah. We talk quite frequently, and you always say to me, just like every single day, looking at what's going on in the Australian economy, like how that actually, what that does to your brain as you go through the week, as you go through the months, and then you see something come out in the news about negative gearing this, or something to do with tax policy hits the news, or population growth, which is a great one. You just think, I just got to rehash this argument again. I remember when the negative gearing debates were really like storming. They're not so storming now, but after the last election, and you would just like trash out that you get the same content again, and just it was like it's like hammering the mole,
Yeah.
You just like give it a hammer with another piece on the negative gearing. Yeah,
well, that sort of shifted now to the rental market. Probably is the big one now, which I'm hammering more than anything, just because we've got I don't know if I'm talking about it now, but just free flow or what, but blind Freddie can see we've got a massive rental crisis right now, and it's just insane to me that with the lowest vacancy rates on record, you got rents going up at double-digit rates, that the government is running the biggest migration program in this nation's history. It's just it beggars belief. Like, what do you think is going to happen when you do that? You're going to have an even tighter rental market, soaring rents, and more people chucked into homelessness. And that's sort of my big bugbear issue at the moment, I guess. Like in the past, it's been like negative gearing at one point and some other stuff. We've always been pretty much down on the whole mass immigration model. I think it's the stupidest thing this nation's done, or not the stupidest. We've done a lot of stupid things, but it's one of the very stupid things that this nation does. But to me, it's just I look at the rental market and go, what are we doing? It's everyone loves to talk about house, and I do it. We all do it. You talk about house prices, especially with the CoreLogic Daily Index. You can talk about daily if you want. We all talk about house prices and housing affordability and all that, but really the story is the rental market. Like, if you want to look at where the tragedy is, it's actually the rental market. And the renters are sort of the forgotten people. So they're the ones getting absolutely smashed at the moment more than anyone. And I'm a 45-year-old guy now, and I'm actually thankful to be 45, because I reckon if I was 25, life would be a lot different, or even, 20. I was lucky enough to be old enough to get in to the market, I guess, when housing was rip off compared to previous generations, but compared to what you're facing now, like the employment market is more precarious. You've got obviously, you start off with a bigger HECS debt if you go to university, and then you're facing high, sky high rents if you have to rent to then save up for a house, and then once you get a house, you get screwed there as well. So yeah, definitely the younger Australians are copying it, and it's most visible through rents, and also it's social housing as well. Like, there's a lot of talk about social housing. Well, we've got a social housing stock that an article went in the conversation last week, where the social housing stock went up, I think 3% in net terms this century, whereas population's growth's gone up 25% mostly through immigration. So it's like, well, of course we've got a social housing crisis as well. So it's just stupid. But anyway, we're going to get even more immigration this year, and I wouldn't be surprised if we get 500,000. So it's just maddening that you can grow the population by Canberra or more in the case of this year, and think that you're not going to, and then at the same time shed crocodile tears over rental prices, which has been, or a housing shortage that is engineered through your immigration policy. It's ridiculous.
We've been saying that for a long time with the amount of housing affordability reviews that have been done over the years, and another Senate housing inquiry that we can go and submit this great big submission to, which goes through all the details of why we have a housing problem in Australia, which isn't really difficult to navigate through those details.
No, you just put a fire hose to demand, and then you say, oh, we don't have enough supply.
Yeah.
And it's just like the same thing, but the answer is always, oh no, we just got to boost supply. It's like, hang on, we haven't done that for the last 20 years or the last 15 years of extreme migration before COVID. And then you're going to ramp it up even more than we did in that 15 years. And you think the problem's going to miraculously fix itself. It's going to get worse. I mean, look, the intergenerational report said that Australia's population is going to grow by 13.1 million people over 40 years. So basically 50% in 40 years. So that's the same as adding Melbourne, a Sydney, and a Brisbane currently to Australia's current population in 40 years. Now, immigration has grown faster than what they predicted at the moment in the last, this year and last year. So we're already beating those forecasts. But you don't have to be a rocket scientist to think, if you put a Sydney, Melbourne, and Brisbane currently, you add that again to Australia's current population in 40 years, of course you're going to have housing shortages. And you're going to have, it's going to be an absolute bloody disaster. But somehow, reducing immigration back to historical average of about 100,000 a year is not allowed. You're not even allowed to discuss it. You're a racist. You're xenophobic. Whatever. It's just stupid. But anyway, that's what we've got. That's the modern Australia that we live in. And unfortunately, as bad as the previous government was, this government's even worse. They are open borders nuts. And even the Greens and open borders nuts. So you got the conservative side of politics sucked, and they were, corrupt and incompetent or whatever. Now they've gone, you got a woke version of them that's actually in a lot of ways worse. They're like the wolf in sheep's clothing. So, it's just, and of course, none of this was taken in the election. There was no discussion in the election that the government is going to increase immigration. It's going to record levels. We're going to fire hose as many people into this country as we can. There was zero discussion. They deliberately did not discuss it. And as soon as they got elected, they held a phony jobs and skills summit, which they stacked full of lobbyists who are pro mass immigration. The only party that wasn't was the union movement, and they actually made some sensible proposals, which was the one thing that didn't get approved in the jobs and skills summit. And now they're doing a fake immigration review, which again is by pro mass immigration people. So we're just going to get out of that, basically cover to increase it even more. So it's just, we've just swallowed the Kool-Aid on this stuff. And at the same time, everyone's whinging about a housing shortage. It's like, well, you guys have created this. You've deliberately created this. Is not accidental. This is engineered by your policies.
But I don't think they don't really understand how it works on the ground. I mean, we have to acknowledge that with politicians, or if they do, there's no evidence of it. But when we're talking about a rental crisis, I mean, people sort of think of homelessness. We conceive of, okay, people say homelessness is caused by, you know, alcohol or abuse at home. But of course, it really comes down to a lack of affordable accommodation when you get to the nitty gritty of it. And the situation that we've got at the moment, though, isn't homelessness in that demographic so much. It's homelessness in people that have a job, are employed, drive a nice car, have a life and a lifestyle where you would look at the money in the bank and you would look at them and think that they're pretty okay, and yet they can't find accommodation. And I've heard a few stories in Sydney of people sleeping in cars and using the gym for a shower because they've in between rental accommodation and they haven't been able to secure one because they're going to the inspections and there's multiple people turning up at the inspections. And it's just, I mean, that really is just horrific when you think about that's happening in Australia, in a wealthy country like Australia.
Totally. And I'm sort of thankful that I luckily own occupier, purchased a house, you know, in 2006 first time, and then upgraded the same area. But you know, I'd hate to think if you're on the rental market and you'd be that, especially, you know, if you got children or whatever, what are you going to do there? Like, you know, there's stories in the mainstream media all the time now. There was a big one on the weekend in the SMH about you know, the hidden face of Sydney's rental crisis. It was called something like that, and it just showed all the different people who are basically struggling, like couch surfing and all sorts of stuff, living in cars and caravan parks and blah blah blah, just trying to. And it's exactly what you just said. And a lot of them just normal sorts of people. At the same time, though, there were some, you know, fairly recent arrivals who are also struggling. You know, international students and stuff, and they're now facing, like, they can't get in either. So we're just fire hosing more people into the problem that we already had a huge shortage. Now we're just going to turbocharge it and make it even worse by making the people competing for rental accommodation compete with another 300,000 or plus, maybe 400,000, maybe 500,000, because presumably when people come to this country, they don't buy straight away. They go to the rental market. That's the first step. And you know, we've got an acute rental crisis, the lowest rental vacancy rates on record, and we're going to add to that by hundreds of thousands of people. It's lunacy.
Bizarre, yeah, it's bizarre. But of course, the consequence of that massive immigration push is something that actually the reason that I hooked up with you on the phone a few days ago anyway was because I'd done this interview with the cook who had said who had took part in the great housing debate last year with Christopher Joy, and Joy had said, "Oh, the markets, the median prices are going to fall by something like 15 to 20%."
Yep.
And the cook had said, "No, it's going to be around 7%." And you know,
gutsy call.
It was anyway. They declared Chris Joy the winner on Twitter at the time.
Yeah. I did as well. I wrote an article saying I declared. No, fully. I'll be honest. I thought the kook was crazy when he said that. I was like, "What are you doing, mate?" Like, the whole Chris Joy's whole argument, which logically is pretty infallible, I thought anyway. And to be fair, the kook hasn't won yet. Like, there's a whole nother league with this, which could potentially happen. But at the moment, he's looking good. So the kook said 7% peak to trough, and then he adjusted to 10. And I think as of CoreLogic, it was based off the CoreLogic index. So as of February, CoreLogic's index had fallen by 9.1 or something, 9.2 nationally, something like that.
Yes.
So it's pretty in between pretty close to his 10% thing. But it's actually bounced pretty hard this month, the daily index. So if that is the bottom, he's looking pretty good. And Chris Joy's whole argument was, well, as the RBA racks up interest rates, borrowing capacity is going to shrink, which is true. And when borrowing capacity shrinks, people aren't going to be able to pay as much for mortgages and stuff like that, which means house prices necessarily have to fall. And it seems incredibly logical. Like, in the short run, borrowing capacity, interest rates should be the number one determinant of house prices. Like, not immigration, like that stuff matters over the longer term. But if you're looking at the next 12 months, you go interest rates, borrowing capacity matters the most, for sure. And we've just had 10 consecutive rate rises, 3.5% cash rate increase. And you think, well, that's lowered borrowing capacity by, some people say 25%, some people say 30, but some people say 35 or 36%. But it's, somewhere between that quarter to a third, the borrowing capacity has shrunk because of that. And so based on that, and that you'd think that not prices won't necessarily fall by that because people don't always borrow to the maximum, but it's going to fall by a lot. And because we've never had such steep increases. And the fact that it's only gone down 9, if that is the bottom, is pretty spectacular. And Cook's whole argument was, we've got, immigration's coming back, rental housing shortages, which are true. Like those two things are true. And I can't remember if there was anything else, but those are, he basically was arguing that those two things are more important than interest rates. Joy was arguing the opposite. I was arguing the opposite. Pretty much everyone other than the Cook, which as well was a really gutsy call. Pretty much everyone, like the consensus decline was about 15 to 20. That's pretty much when you go across all the banks and all the property forecasts and everything. I was in that boat. They were tipping sort of 15 to 20 would seem to be the norm. Then you had a few outliers that were going a bit higher and a couple that were saying 10 to 15. But Cook was, I think, the only one that I know of anyway that was sort of saying under 10 or about 10-ish.
We were saying at Leith. Well, I mean, I was always never ever thinking that the national prices were going to fall that much, just basically, based on the cyclical knowledge I had. And Phil Seuss had done some charts at the time for us, the Cape Index. Don't know whether you've seen those, but no. Subscribers have, but they indicated that the market was a little bit more resilient than we would see nationally. And nationally, that type of fall in the median value nationally has not happened for decades. But the other thing that I always say when people talk about the median price was there were really significant falls in the top end. So always. We did see that. I mean, the median price hides a lot. I always say it's just the middle number of a bunch of figures. But it's sales results that come out, and the top end, like the $1 million, $2 million plus, depending on where you're looking, those vendors had to discount significantly into the middle of last year. And then the market I would argue that it found its bottom around there because it did continue to decrease, but there were areas which are obviously more affordable, regional areas and the markets which weren't so subject to those bigger falls that kind of held their price okay. So it was more kind of like there just wasn't enough confidence in the market. So I kind of leaned in that direction. But the other person that we mentioned when we were discussing this on the phone was Louis Christopher, because I said to you, there's no one else, and I certainly didn't do this, but there's no one else that would have called a rise in Sydney's median price for this year. He was the only one that came out on the release of the boom bust report in November. I interviewed him just before that report came out at the time, and he said, yeah, Catherine, there's going to be, we're expecting, should our base case plays out, and the base case play out, and the base case was, the cash rate would not increase past 4%. Then he was expecting a moderate recovery in the markets in Sydney, led by Sydney and Perth. And I said to him, well, the one stat that people are going to pull out is your Sydney spruik, that Sydney's values are going to start to increase. He said, yeah, there's just a shortage of accommodation. And of course, that's what's occurred this year. I mean, nobody would have pinned that, but Sydney's actually looking pretty good. The clearance rate is pushing up. Yeah,
and the thing about it is, again, that's a gutsy call, because you think that Sydney, having the most expensive housing market with the biggest mortgages, should be most sensitive to interest rate rises. So the remarkable thing about it is that we had a rate rise in February, rate rise in March. That's a full another 0.5% over those 2 months. Yet the CoreLogic index, and led by Sydney's gone about 1%, 1.1% since 7th of February. Turned around on about bottom of the 7th of February, and it's been rising ever since. And you go, hang on, the RBA lifted rates so that around about that time, and it's done another one, yet prices are rising into that, which is pretty extraordinary. So it just goes to show it's if Louis made that call, that's a pretty ballsy call. So was he saying that prices would be up, like was he saying they'd start rebounding at the end of the year, which is what I've been saying? So my whole thing was
a modest recovery, and I can't remember the exact percentage. I've been misquoting.
But was that like over the calendar year, or was that he thinks by the end of the year it's going to be recovering? Because that's sort of what I was saying. But I thought it would keep falling until the third quarter, and then the RBA would cut sort of third quarter of this year. Then the final quarter we get a rebound, and I think this is where we all agree. 2024 is going to be a bloody boom, like a huge boom.
Yeah, it was. Yeah, I got to get you on the show to talk about this, because I think it's really clear on the ground. So first of all, what Louis was saying, I mean, I can't remember. You'd need to go back to the report.
I must admit I missed it, so I don't know.
I don't know whether he was calling it as an immediate, but I think what he was seeing, and obviously Louis is based in Sydney, so he's pretty close to that market anyway. And he was saying, well, look, the work from home, people are going to be moving back to the city. So this work from home thing is going to be kind of turning into this hybrid model. And then we've got the stamp duty to land taxation, which will be washing through and increasing by demand. Then we've got immigration that is ramping up, and obviously
massively
highlighted like how enormous that is. And it's not just enormous. I mean, that has every stimulus behind it from a government policy perspective, which we'll talk about briefly in a second with the Indian students thing that's kind of been added to it. I mean, they're really pushing on that. So he kind of saw that, and then against, obviously, he's at the front with his own stats, seeing the issues with supply, and he just said, like, it just can't help but do this. But it was based on, and I tweeted to him when the auction results were starting to improve. I said, could his forecast be coming true? And he said, I just made the case that it was based on the cash rate not exceeding 4%.
4%, yeah. So
said that, obviously, what's happened? How much has changed in a week? I mean, how have we seen so much has changed in the week?
Yeah.
The banks, Silicon Valley Bank, obviously, we know why that occurred, but the policy response in reaction to that is looking like it could be a game changer as well. So yeah.
Well, I mean, everything's shaping up to 2020 or next year. I mean, maybe, when I say that, it could start, I don't know, late this year where it really starts to ramp. But I think all the indicators are we're going to have an extraordinary house price boom going into 2024, whether it's before 2024, I don't know, whatever. But you've got all the factors that sort of point in that direction. So Sydney usually leads the market, because I think it's because my logic, even though it's not showing that now, is that it's because it's the most expensive. It's, you said the high end generally leads the price booms and leads the bus. It's the most volatile. And Sydney's kind of like that if you look at it in an Australian context. Because it's the most expensive, it's got the biggest mortgages, it's most sensitive to rate rises. It tends to go up the most, fall the most, all that sort of stuff. It's a bit more volatile. And so Sydney should be leading us out, but it's already doing it in the face of rate rises, which is extraordinary. So, I mean, whether or not this is the bottom, it's, we might have another little small leg down if the fixed rate stuff takes off and all that. I don't know. If the RBA does a few more hikes, which it seemed crazy if it did now. But irrespective, I think going into next year, we're going to have a big boom, because likely the RBA is going to be cutting rates. We've got the prospect of APRA loosening the mortgage buffer. So at the moment, the loans are assessed at 3% above the interest rate at the moment. Now, that made sense when the mortgage rate was 2% or whatever. Like, they had to keep a decent margin. But with mortgage rates so high, there's a chance the APRA will maybe lower that to 2%. And APRA has refused to do it right now because it doesn't want to work against the RBA. The RBA said they're going to increase rates higher. So it's stupid for APRA to then lower the buffer while the RBA is still tightening, because that's just, they're working at cross purposes. But once the RBA starts to cut, APRA might try and help them out by lowering the mortgage buffer. So RBA want to stimulate, APRA will go, okay, we'll help you stimulate, we'll lower the mortgage buffer. So that's going to increase borrowing capacity even more. So we're likely to have a big lift in borrowing capacity at the same time as we've got record high immigration, the tightest rental market in history, and rents booming, and supply is crimped for the next few years because we've got heaps of builders have gone bust, cost of materials has gone up. So we've got this, massive demand, whether it's, monetary demand stimulus through falling rates and increasing borrowing capacity, people, sheer numbers of people, bodies coming in, in the tight rental market. So nobody wants to rent because it's expensive, it sucks, it's precarious. So we've got this massive fundamental demand as well as monetary demand. So I don't know what you think, but to me, that points towards a big rise in house prices next year, or going into next year and next year. Basically the next cycle, I think it's going to be an absolute boom. So, I think it's just the writing's on the wall, in my view anyway.
Yeah, well, you know what I think.
Just coming way earlier than I ever thought. I'd say I think I wrote an article a couple of months ago saying 2024 prepared for a housing boom or something like that. But I thought we'd fall another 5-6% before it got to that.
Yeah.
But looks like, we could already be at the bottom of that. And so yeah, what extraordinary.
Yeah, I can tell you on the ground, just obviously I'm on the ground every day with buyers and sellers, and out there at the auctions on Saturday, monitoring what goes on daily. And I can tell you the atmosphere has changed on the ground. It's still a fickle market in Melbourne. I mean, is
it FOMO? Because people are sort of, they're like, oh, I don't want to have to rent, and it's shortages, and is it that sort of FOMO?
I honestly feel that I mean, I have had a few buyers through the year that have not wanted to rent, or they've getting to a point where they've been issued notice and they've decided, okay, we're going to get we'll buy whatever we can afford. But I don't think it's so much that. I honestly feel that in Melbourne, it really is to do with the low supply.
Yeah.
There's no real sense on the ground of extreme FOMO, but the auctions are active and there are people that are bidding. But having said that, it's still a fickle market, and fickle by what I mean by when I say a fickle market is that people have choice. There's still a feeling in people's mind that they are weighing up their options of whether to get in. There's still that feeling of, we don't want to stretch the budget, we don't know what the RBA is going to do, we don't know whether there's going to continue rate rises. So every single buyer that I'm working with has put a limit on how much they want to spend in the market, and you don't see that happening on the precipice of a huge fall.
No, well, I mean, that's the thing, that the demand's there. I mean, it's clearly there, but it's just there. What's holding them back is interest rates and borrowing capacity, I guess. And so as soon as that uncertainty though goes, and the RBA signals we're done, imagine what that's going to do. Yeah, suddenly, and people realize, oh, this is it. This is the peak. We're going to get in.
Yeah. Agents, we've been saying that on the ground, for a while. I mean, I think that there's a kind of feeling on the ground that things have changed a little bit, and we don't want to kind of run away with that thought, but definitely there is that concept that once we get to the point where perhaps there's not that same extent of rises, and who knows, maybe we aren't there and that it will continue, but we'll have to wait and see. But once we get to that point, then obviously there's that feeling that it's going to put a light under the market. But the immigration thing is interesting, because if you look at any housing market in Australia, the booms really are preceded by population growth going into that area. So it's population growth going into an area that has limited accessible supply, which has been the Melbourne story. I mean, Melbourne's housing market, we've said it for years, you've said it for years, is like it runs on the population Ponzi. It's like population growth pours into...
I should trademark that term.
You should specufesters or something. Trade. And you're great at headlines as well, as we keep talking about. But I mean, Melbourne's market, the booms and the busts, we have population growth that comes into Victoria. Obviously, when it comes into Victoria, the vast majority of that, unlike Southeast Queensland, comes into the city of Melbourne, and it is just what has supported Melbourne. So that I read an article the other day saying that from a moving company that was saying that there's all these people moving back to Melbourne after the lockdowns, but that would indicate this population growth that we're seeing. I mean, that was what happened in the pandemic as well, wasn't it? Was that we had population growth going into the regional areas that weren't set up for that kind of demand, and also along with the stimulus and the low rates and everything that was kind of pushing money into those areas. But now we're seeing this reverse into the cities. I mean, you would think that there is that has to play out in terms of where the median prices are going to go.
Oh, totally. And so Sydney, Melbourne, Brisbane, like Brisbane's getting red hot population growth as well, but it's through people leaving Melbourne and Sydney. They go to Brisbane. So Brisbane's had the strongest population growth over the pandemic. There's actually an article going up in Macro Business in about an hour or so on this, about Brisbane's massive internal migration, but Sydney and Melbourne are getting the lion's share of the overseas stuff. And then obviously there's some of that coming back from the regions as well after the lockdown. So it's just the whole East Coast is getting piled on with people. So Brisbane through mostly internal migration, Sydney and Melbourne through international migration. And look, there's just there's a huge amount of actual fundamental demand. So people needing housing. And the only thing that's been holding it back is obviously rate rises and borrowing capacity. So as soon as that goes and it starts reversing, the RBA starts cutting rates, well then, gee, that's gonna be a firecracker. So yeah, it's why I think next year it's going to be a shocker if you're a first home buyer or want to be first home buyer next year. It's going to be pretty awful. You're going to have probably soaring house prices at the same time as rents are still rocketing as well. So they're going to really be stuck between a rock and a hard place. So it's not great for them. But if you're talking about just the property market, the property prices overall, I can see a pretty big boom going into 2024. So anyway,
get in now. Let's talk about some different markets, because I was talking first of all in Australia, and then I want to talk about New Zealand as well, because I get a lot of questions about New Zealand, and I know you follow that data closely. But first of all, WA, I was talking to someone that is currently purchasing in WA, and they were talking to me about going for properties that had like 18 offers on the table already when they go to purchase. So the properties there, the market works really differently. The buy market works really differently in WA than it does on the East Coast. So the agents don't work buyers up against each other. They're obviously quoting prices that are very conservative. And when I'm talking about that, the market taking off, it's really in the housing market more so than it is in the unit market. So apartment prices aren't necessarily flying, but certainly anything that's on a green title block, i.e. on a block that hasn't been subdivided, on an independent detached house, for example, is really attracting quite a degree of demand. And the properties are flying over the quoted range. What happens when those offers go on the table is that the agents don't necessarily take those offers and say, okay, we'll do like this Dutch auction thing, we'll work the buyers up against each other. They basically, you just get a call the next day, your offer wasn't good enough and they've sold it to someone else. They're not necessarily going to come back and ask you for more. But it's very, very interesting and a completely different market. Like if I talk to any agent in WA, they say to me, what downturn? Because they haven't really experienced a downturn. What are you seeing in the stats? And I mean, you're writing about, what's going on in the mining industry there and everything every day. What are you seeing?
So WA has been pretty insulated because, obviously they're the key beneficiaries from the mining boom, and unlike the East Coast, they're actually got some pretty sensible policy in that they reserve their gas. So they're not feeling this cost of living squeeze, like the energy shock like we are in the East Coast. Like their electricity prices and everything they're going up like 2% a year, versus ours are going up at 30. So they're actually doing sensible policy. But on the housing market side, obviously Perth experienced WA and Perth experienced a huge downturn last cycle. And their prices are still very, very cheap. Like they haven't anywhere near recovered where they were back in, I think, the 2015 peak or 2013 peak, something like that. So like they were always insulated. And I think even in the great housing debate, Chris Joy acknowledged that Perth wasn't going to decline much. Because it was already so cheap. It had already declined so much over the last cycle. It didn't rise that much over the pandemic either. So it was,
in some suburbs it really did, like in some of the
I'm sure, yeah, I'm talking about the median, like the CoreLogic index, whatever. So yeah, it is, it was already way more affordable. So it never had the big run up over the pandemic like the other states. It was already starting off from a much lower base. The cheapest house prices in the nation, really, if you look at them by capital city level. So it was really good value. I actually thought about buying a place in Perth. But it's just, it was before I knew that you were working there, Catherine, because I might have hit you up, because it was just, being a bloke from Melbourne, it was like, yeah, okay, how do you do it? Like, it's just, I've been to Perth twice in my life. When I was in 1984, I think it was, I was a little kid, I was 6 or something. And I went again a few years ago for like one night for a macro business tour. And so I don't know anything about the market on the ground. I don't know really. I know you can study it from afar, but it's not the same. And it was just something about it's almost like buying a different country, except using the same currency. So for me, I was just like, look, this is, bridge too far. So I bought a place in Brisbane instead. But Perth was really enticing just because it was so unbelievably cheap, really high rental yields. Just seemed like a, really safe bet after almost 8 years of prices being way lower. than what they were 8 years ago. So, yeah, I think Perth's a pretty safe bet, but it doesn't seem to have the same volatility as you get in Melbourne and Sydney, for example. And that might be because of what you just said. Like we have a real, like Melbourne's a shark's nest. So's Sydney, where there is this, intense competition between buyers. I think especially, the auction system creates that. Sounds like Perth doesn't, it's mostly for sale. Sounds like the agents are sort of, I don't say they're stupid, but they're backward in that they haven't learned how to be sharks and play people off against each other. So it's a better system. Like there's a better system if you're like from a from morally it's a better system, but in terms of like driving FOMO and that sort of contagion you get from by creating a frenzy, it doesn't sound like it creates a frenzy there from what you just said.
Correct. Yeah, I mean it's quite remarkable because there'll be oftentimes there if I'll call up an agent and say, oh, got interest in that house, someone's been through the open, we've got interest in it, and he'll say, oh, Catherine, I sold it yesterday. And I say, well, why didn't you call me? Why didn't you just get on the phone and call me? And he said, oh no, I'm not going to play those games. I'm not going to call around buyers, first in, first serve. And I said, yeah, but I would have paid more. That's the bottom line of it. And you're working for your vendor, you're not working for the buyer. It's the vendor that is the one that's paying you to get the highest price. But that just seems to be the way it goes there. And I've heard it's similar. I mean, I haven't done any buying in Southeast Queensland, but I was talking to an agent the other day, and he was saying, oh yeah, it's the same in Queensland. I think Melbourne and Sydney, you live in Melbourne and Sydney, and it's just a completely different atmosphere. I mean, it's quite a difficult one to navigate as a buyer in Melbourne and Sydney.
Oh, dog eat dog, like it totally different. Well, I mean, so I bought the place in Brisbane, and that was like I bought it off market, so it was different, but it was just different place. Like they have auctions, but it's such a small share of the sales compared to Sydney and Melbourne, and it's just a bit more old fashioned, I guess, the way they do it. Actually, a really smooth process. Everything's electronic. It's just it was very easy, actually, easier than when I bought this place in Melbourne. So yeah, weird, but like from a bureaucratic perspective, it was very easy. But
it is now.
Yeah. Well, yeah, maybe it's like that here too, but I bought this place in 2013. So yeah, it was all still, I don't know. Yeah, maybe it hadn't gone electronic back then, but but still auctions are pretty, they do happen, but they're more foreign in Brisbane. So it's more unusual to have auctions. So it's a bit more, sounds a bit more, it's probably more like a hybrid between Melbourne and Perth. It's not quite Perth, but it's not quite, I think it's not quite Perth because we get so many Southerners come up there. And we're more, we're used to the competition, all that sort of stuff. So maybe that's starting to change their culture, which is probably why they hate us going up there. But so it's different. Like Melbourne is probably the most Ponzi-like, I'd say, but maybe that's because I live here. So I'm biased, followed by Sydney, just because our share of auctions seems to be even higher than Sydney's.
It is.
So we are, it's, Melbourne generates the FOMO more than anywhere else in Australia.
Yeah, it really does. I mean, that auction market of people seeing properties sell on the street, it's like being on the floor of the stock exchange. You get that sense, and of course you miss out on one or two properties, you think, I'm not going to miss out again. I'm going to and it kind of pushes that volatility in the market in Melbourne. It always has. It's a very exciting market to work in, but it is a boom-bust market. Yeah.
And the interesting thing is, like, I'm not sort of guy who goes to auctions, even in my, occasionally go to one in my street, I guess, if it's like 3 doors down, but I just can't be bothered. But when you do, it's like, you just see everyone from around the area. Like, it's probably not a bad way to socialize with everyone in your area, because it's just like, it's the sport. Yeah. There's an option, 3 streets away in your suburb. And if a friend of mine was selling his house, one of the dads from my school about 2 years ago in Melbourne, about 3 streets away. So I went along there just because he was selling it, and everyone, like, it's the time I saw more people from my local area in the one spot than I reckon any other time. It was during auction, and that's just the Melbourne culture, I guess. And everyone talks about, I see what that price, what that house went for, and all this sort of stuff. It's just like, I don't know. I'm not a fan of it, but that's the way it is here.
I was saying to someone the other day, because I've lived in America, I lived in obviously in Europe and from England and everything, but I was saying to someone, when I came to Australia, I'd never seen anything like it. I've never been to a country where you have these big billboards outside houses advertising for sale, that you have these glossy magazines and the auctions on the street and the real estate agents that are kind of not treated as rock stars or so much, but just the whole flashiness of it. You know, I mean, maybe it's like that in areas in New York. I didn't live in New York when I lived in the States, but never seen anything like it is in Australia. And so, yeah, I mean, we know that the economy is choreographed around the housing market, and maybe that's obviously why we've got this immigration push, because if we can't have interest rates breaking the market, so we better do something to counteract that. You know, buyer grants aren't so popular anymore, so we'll just open the doors and get as many people as possible to come in and kind of support what's happening, because the myths that surround the immigration debate are just crazy, aren't they? I mean, I want to get onto New Zealand in a minute, but you did write about what's going. Well, there's been a few reports that came out. I know you spoke about one today, the Productivity Commission, wasn't it? That they report out supporting how great it is for GDP or something along those.
Yeah, well, it's a typical neoliberal crap you get out of these outfits. So whether it's Treasury, Productivity Commission, I work for the Treasury too. So I'm throwing mud at the place I used to work. It's this whole notion that just growing GDP through people is somehow good. And the issue I took with the Productivity Commission today was they have this myopic view. Treasury does it, the Grattan Institute do it, they all do it, where they said that basically, immigration boosts the federal budget, therefore it's good. And that was the whole view. Like they said, because people come over here and they miss their first few years of life, which is, obviously cost the taxpayers money when they're kids and you got to send them to school and all that. They therefore are good for the budget. Therefore, we should have heaps of immigration. And it's just the most myopic, stupid, approach I've ever read, in that it doesn't consider any other factor, like, the carrying capacity of the environment, impact on living standards, housing, infrastructure, all the just basic quality of life stuff. And stupidly, it doesn't even, they didn't even take account of, and this is what Grattan does, this is what the Treasury do. They never take the impact on local, on state budgets, for example. So the way the tax system's set up, 80% of the revenue goes to the federal government, and the states and local government collect about 20%. So obviously, if you increase the number of people through immigration, the federal government's going to collect way more tax. But the costs of providing all the infrastructure, schools, hospitals, blah, 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 everything else tends to fall on the state governments. So the federal government basically privatise the gains, whereas the losses are socialised on the state governments. So how do the state governments get around that? They privatise everything in sight, do these BS, public-private partnerships, which basically are privatisation. So that basically a lot of the services and infrastructure used to get as paid for through taxes are now paid for through user pays and tolls. And so the state governments do that in order to keep up with the massive population growth that's hoisted upon them by the feds. And you end up in this situation where, the Productivity Commission is going on about the budget benefits when the costs are being socialised on everyone else. And they don't take any of that into account. And a classic example, if you want to point to somewhere where this is the most stark example, is Sydney. So 20 years ago, before we embarked on this mass immigration madness, Sydney had about 2 toll roads. Now they've got about 20. They're the most tolled place in the world. You cannot drive anywhere in Sydney without going down a toll road. And Transurban owns just about all of them. Melbourne's, a fair way behind. We've got, we've had a similar experience. And why have they built all these toll roads? To keep up with the massive population growth we've had through immigration. So all it's meant is that if you're a Sydney-sider now, you're paying thousands of dollars a year to use roads that 20 years ago you would have used for free. And the government's gone about how this is great for the budget. Well, it's not good for your budget, is it? You're paying thousands of dollars to drive in more congestion. It's taking you longer to get anywhere, simply because Sydney's grown from, say, 3.5 million people to 5 million people in the past 20 odd years. And that's all through immigration. So this is the sort of stuff that drives me crazy when I read these sorts of reports. So I read this report from the Productivity Commission. Immigration's great. And then they endorsed a $70,000 wage floor for temporary skilled migrants. Now, The median full-time wage in Australia is 85,000.
Yes.
So they're like, well, hang on, the median full-time wage includes unskilled people. So the skilled median full-time wage is probably more like $95,000. Yet the Productivity Commission's endorsing the $70,000 wage for skilled temporary migrants who aren't actually skilled if they're getting paid 70,000. I'm sorry. You know, based again because temporary migrants are better for the budget because we don't have to give them Medicare and stuff. So that was the whole argument behind it. So yeah, it's they're a pack of knuckleheads. The Australian Treasury's a pack of knuckleheads. The Great Institute's a pack of knuckleheads. They all run the same kind of line, and as a result, you know, the federal government follows this BS. Obviously, the business lobbies and the property lobby and everyone else pushes this stuff as well. And the universities are now some of the biggest population parasites. They get to privatise the gains through the university system. So basically, student visas now are basically an immigration scam to a large degree. So they're basically a way to migrate here through the back door. You come here, you study a course, whatever, you get a fast track to permanent residency, you get to stay here for years and work, etc. That's the primary reason why a lot of them come here. They don't come here for the education. So the universities are now part of the scam as well. So we've got this situation where 2/3 of Australians don't want the levels of immigration we had pre-COVID. That's what all opinion polls say. 2/3 of Australia, well, 70% of Australians think Australia's population is big enough. Yet the federal government just ignores all that, and they're ramping immigration to record levels, backed by the knuckleheads of the Productivity Commission, the Great Institute, the Treasury, and all the business lobbies and the property lobby, the universities. So yeah, it's basically the immigration fix is in. That's all I can say.
Yeah, it's interesting, particularly what you're saying about Transurban. I've written about that before. They want to be behind the road pricing, if road pricing.
Yes, so Transurban did a submission to the government a couple of years ago saying they want to be a meta monopoly and control road pricing in Australia. So I'm like, are you serious? So and the idiocy of this whole privatisation thing has come to the fore this New South Wales election, where it's basically come out that the documents have emerged that the Perrottet government, the coalition government, had plans, or has plans, probably had plans now because it's so on the nose, to privatise Sydney Water. Now, this is Sydney Water. It's Australia's biggest public utility.
Yeah.
Providing something that's absolutely essential. Like there's nothing more essential than water. And they want to privatise it.
Yeah.
And it came out last week that they want to, one of the water plants, they want to sell to the Chinese Communist Party. So basically a Chinese government-backed water company. So are you serious? You want to, and it's financially destructive as well, because the government gets heaps of dividends from the publicly owned water company, which they want to basically sell for a lump sum that when you do the present value of that, discount it, is actually way less than what it's worth as an ongoing cash flow. And the Australian Institute did a great analysis on it. And this is the sort of idiocy we've come to in this country where, yeah, and then the whole logic behind it is, we need to do this asset recycling, where you basically sell your assets for a lump sum money, and then you can invest it into new infrastructure, which you have to build simply to keep up with the mass immigration-led population growth. It's just, how about you don't create that growth in the first place, so you don't need the infrastructure, so you don't need to sell all this stuff. And of course, they don't just sell it; they then do these public-private partnerships where, with Transurbans and these mobs, where government chips in a bit, the private company does a bit, and then you end up getting gouged on fees. Yeah. And that's basically been the Australian economic model for 20 years. Well, actually longer than that, but the last 20 years it's gone in turbocharge. And this is why I hate this model so much, because it just creates, and then of course, Productivity Commission never takes the stuff into account. To them, they say it's good because, government ownership bad, private ownership good, more efficient. Yet we have examples where you just go straight over to the Scandinavian countries who do the exact opposite. They got the highest living standards in the world, despite having crappy climates. Yeah. And you go, well, why don't we copy them? They do it a lot better. And someone like Norway, which is sitting on North Sea oil and gas, is a bit like Australia, is a massive commodity exporter. They, instead of handing their commodities over to private companies, who then make huge profits, gouge us in the case of gas, and then send the profits to foreign owned shareholders. They're 90% foreign owned. The Norwegian keep it in Norwegian hands, and they put it into a sovereign wealth fund that's now worth 100,000 US per citizen.
Yeah.
So, it's like we could have done that.
Yeah.
But we did the opposite. So, but then the solution's always, we've got to do more of it. Like that's the base of the Productivity Commission report. It's like, we need to do all the stuff that failed in the last 20 years, and we need to keep doing it because that's the path to productivity. And it's like, no, we've got 20 years of empirical evidence which said that that's self-defeating.
Yeah.
But these knuckleheads continue to push the same failed agendas that we've just done for 20 years. So it's just Treasury, Grattan Institute, productivity, all the same.
It's criminal because that wealth is common wealth and
Yeah.
it should not be wealth that is privatized. And I think that's just the misunderstanding of the economic system, which, because, I'm obviously president of Prosper Australia, and that's our whole premise, is that it's the wealth of the commons that should be kept in the commons, and it's your own wealth should be kept to yourself. So you obviously tax the earnings of land, the monopoly rents that you don't earn, and untax the things that you do genuinely earn, your labor income. And that was actually one of the I did talk to the cook about that. We were discussing the Henry tax review, which leaned in that direction and said, well, we need to relieve the taxes of income and productivity, and we need to put them onto these broader bases, of course, one of the predominant ones of which was land. But
yep.
Without getting into a tangent about that, we need to talk about New Zealand. And I feel that this is certainly important for my subscribers. As you know, I write about the 18-year cycle, and I'm pretty much Australia is on that 18-year cycle, and I feel that time's where the next downturn is going to come. And just from your own analysis, that you do, I know that you don't necessarily align with the 18-year cycle.
No, I mean, I don't know. I'm always like, when you're in the weeds of this stuff every day, right? You're just looking at what's in front of you.
Yeah.
So it's like, what's in front of us at the moment? Obviously, the interest rate stuff's been front and center last year, and then you got the immigration and whatever. So I'm always just looking at everything through that lens. So yeah,
I mean, it's interesting. That I think that was one of the reasons why I wanted to get you on the show, because you're, from what you're seeing on the ground, kind of really ties in with the analysis of what I'm saying with that cycle. And a lot of people are sort of saying that is that we're actually heading for a boom. We're not heading for a bust. If everything plays out as the fundamentals are looking like it's going to at the moment, then that would play into what we talk about, which is the winner's curse phase of the cycle, which is the final 2 years, which are the most bullish and actually which have historically played out in each state in Australia. But New Zealand, what's going on with New Zealand? I spoke to somebody the other day. He said to me he's watching New Zealand closely, and because it's been their rate rises have been more dramatic than ours have, and therefore
yes and no. Actually, they've been in. So on the face of it, they have been. So New Zealand's increased their interest rates by I think what's 4.25%. I think it's since October 2021. So they moved early. They've done it by more. So they're at like 4.75. So they've increased at 4.5%. They started at 0.25, and they've increased it earlier than us, and they've done it by more. So we're at 3.6. They're at 4.75, and they've gone a bit harder. But if you actually look at the percentage that the average mortgage rate has gone up between Australia and the other Anglo countries, we're by far the highest. And the reason for that is that the overwhelming majority of mortgages in New Zealand, about 80 to 90%, are fixed. So it's kind of strange. So New Zealand and Australia got the same banking system. We've got the same big four banks. So basically got the same banking system. Yet for some reason, like 80% to 90% of mortgages in a given month in New Zealand are fixed rate. So they're anywhere between 1 and 3 years, like what our fixed rates are. But in Australia, it's the opposite. So we're predominantly variable, although the fixed rates went up, had a bit of a surge over the pandemic. So because so many people in New Zealand are on fixed rate mortgages, their interest rate rises, which have been greater than ours, haven't yet filtered through to the same extent to their borrowers. And a bit like us, so we keep talking about this fixed rate mortgage cliff, where nearly a quarter of mortgages, like there's 880,000 mortgages this year in Australia, which is about 23% of the value of total mortgages, convert from ultra cheap fixed rates that was done at about 2%. over the pandemic to, well, anywhere between 2 to 2.5, will go to variable. So they'll basically double to triple depending on where you're at. In New Zealand, that number is 50%. So New Zealand currently hasn't had the same increase in mortgages because so many people are insulated because of fixed rates. But this year, we're both facing a mortgage cliff, but New Zealand's is doubly as bad as ours because they got such a much bigger share of fixed rate mortgages. And when those convert, they'll either go to variable or fixed, but those rates are rocketed, obviously. So they're actually facing a huge ramp up in mortgage rates. But as it stands right now, and the RBA's Financial Stability Review in February actually plotted the increase in mortgage rates across all the countries, and Australia's was the highest. So, we're higher than the US, Canada, UK, New Zealand. We're just the highest because we've got the most variable rate mortgages in the world. Well, I'm not saying out of the entire world, but the most out of the Anglo countries and one of the highest in the world. So, yes, New Zealand has increased by more than what central bank has, but mortgage rates, the average mortgage rate that's been paid by mortgage holders has actually gone up more in Australia as it stands right now, but that's going to change.
But the median prices in New Zealand have taken
tanked.
Yeah.
Down about 16%.
Yeah, incredible, really. And that is across New Zealand wide, or are we talking?
Yeah, no, New Zealand wide. So the best used index over there is actually the New Zealand, the Real Estate Institute New Zealand. So that's one used by the Reserve Bank of New Zealand. So that basically measures sales as they occur, not ones that are being done 6 months ago that come through, or 3 months ago that come through the value of generals and blah blah blah. They don't measure asking prices. So they measure actual sales. They adjust for composition. It's the one. It's like the gold standard. So New Zealand's #1 housing watcher is a dude called Tony Alexander. So he used to work for one of the big four, and he's now like a private. And he's like the guru of housing over there. And that's the only index he looks at. It's pretty much not the only one, but it's the dominant one that RBNZ looks at. It's like the gold standard index over there. And that one's gone down about 16, a bit over 16%. And in Auckland, it's gone down 22, I think, and Wellington at 23% peak to trough. So it's fallen really hard. The more worrying thing over there, and this is the opposite of what's happened here. Listings are rising in New Zealand, but they're not rising because there's heaps of new listings coming on, but they've risen heaps. That's because sales have crashed. So basically demand's plummeted, and there's heaps and heaps of stale stock just piling up in New Zealand. So their listings are going through the roof, but not because people are necessarily rushing to sell. I mean, there's been a bit of that, but it's more because there's just no demand there. And part of it's because the Reserve Bank of New Zealand has actually scared everyone, because it said explicitly its last monetary policy statement, it said that New Zealand's going into recession. Peak to trough fall in house price of 23% is what the RBNZ tipped. So they're at 16 at the moment, and unemployment's going to rise by 2%. So they basically said that we've got recession, big rise in unemployment, and the rates are going to keep going up by about another 0.75, I think it said. So the rise in interest rates, house prices are going to fall by another 8% or something, and then you're going to have or 7%, and then you're going to have big rise in unemployment and a recession. So if you got the central bank saying that, it's probably telling people you shouldn't buy. So can you imagine the RBA doing the same, like coming out with, we're going to keep raising rates, going to push the economy into recession. You got a big rise in employment, and house prices going to tank. That would probably smash the market, I reckon.
It probably would, but they did come out and say, well, rates aren't going to rise.
yeah, I know, but it was like it's
regardless. But yeah,
the RBNZ's very explicit though. Like the RBA's, you always got to read between the lines of those guys. These guys actually put out like charts which say this is what's going to happen. And the December quarter national accounts came out in New Zealand last week, and it's already halfway to recession because it had a negative GDP print. So, and that's ahead of the RBNZ's projection. So they weren't expecting it to go into recession yet. Tipped a few quarters, and it's already like a recession is a technical recession. It's a pretty stupid definition, but you got to have 2 consecutive quarters of negative GDP growth. Well, New Zealand's already got 1.
Yeah, and
there's every bet that March, which it's only got 10 days left, the March quarter is going to be the same. especially after they just had floods there, which is,
Yes.
smashed. It would have smashed the economy for a period while everything was shut. So, yeah, it's,
Just into bound at the right time.
oh, she would not have won. So, I think, although the person, Chris Luxon, who's replaced her, is now looking like he's now pulled level with the Conservative Party, also the National Party, which is their coalition, I guess, their equivalent. So, yeah, no, she did bail at the right time. She was on the nose. She saw the writings on the wall. Like, you don't want to go to an election usually when you got a house price crash. And if you get 23%, I think, anything over 20 to me is a crash. Like, not a correction, that's a crash.
Yeah, I mean,
So,
that is what's happening to the rental market is in New Zealand.
Yeah, look, I probably should track that more closely. I read headlines on it, and I think rents are going up as extremely as they are here. So it's gone up a bit, but the difference between Australia and New Zealand. So New Zealand actually has wage growth. So so their inflation is actually a bit more real than ours. So ours, I'm not saying we don't have inflation, but a lot of our inflation's not. I guess it's a sort of inflation you don't necessarily control through interest rates. So it's more supply side. New Zealand actually, their wage growth they actually had real wage growth the most recent quarter, meaning their wages are going up even higher than inflation. Whereas us, we've got real wage growth of about half the inflation, like minus 3.5%, because our wages are about half the inflation rate, or minus 4%. So, so they actually do have potentially a wage price spiral, which is what everyone's worried about. Whereas Australia, we definitely don't have a wage price spiral. So I guess there is more justification for the RBNZ to go a bit more, hawkish on interest rates than there is in Australia. So yeah, but it's not good signs for the housing. Like, they also had a bigger boom than us over the pandemic. So we rocketed, but they went up even more than us. So they had a much bigger boom. I'd argue their housing market was even more inflated than ours to begin with, based on house price to income ratio and housing value to GDP. So they were, as bad as Australia's house prices were, New Zealand was even worse. So I went into this worse, and then it's had obviously a bigger hangover once the RBNZ started hiking rates. And I think it's going to last for a while, especially, if you got half the mortgage book going from resetting this year, that's a pretty big headwind, you think. So who knows? But I mean, and they are getting an immigration rebound now, but it started later than ours. So they're getting an immigration rebound, a bit like us. They're now coming in thick and fast. So, but it started a lot later than us, so it won't have as bigger impact, I don't think, yet.
Not yet.
No.
I think a lot depends on what happens going forward in terms of rates in that market. But the median, they did have such a rise over the COVID.
Oh, huge.
The median drop has completely wiped that out, has it?
Not yet. No, it's still up a fair way, because it went up massively. I remember I read was it last week? Whenever there's a downturn, there's always the people who, I guess, try and sort of play it down, go, oh yeah, but prices are still up, heaps over the pandemic, this sort of thing. Oh, people are still up. And I read one of those articles. So they were up, they're still up a fair way since the pandemic. The problem with it is, so RBNZ, Real Estate Institute New Zealand, which is their gold standard data, they used to release it for free every month. So I used to just get the spreadsheet. I had it all on a spreadsheet. Unfortunately, about 2 years ago, they stopped doing that. You got to pay like obscene. You got to basically sell a kidney to get the data. So so I don't do that anymore. So I don't have as good a data, but I just when it comes out, you can, you get the headline, you get their chart, how much it's gone up or down from peak. But I can't do the analysis I used to do on it, unfortunately, because I don't want to pay, sell a kidney to buy their data, basically.
Yeah, it will be interesting to see. I mean, I guess a lot there depends on what's going to happen to the cash rate, whether they're going to keep jacking it up or whether they'll see warning bells. And
yeah, well, they should, but at the same time, they said they're going to hike to 5.5%. I think it was what they said. So they're basically another 0.75, even though they saw a recession. So I don't know if this even surprises them that maybe it's come a bit quicker than I thought, but They seem to want to kill inflation no matter what. And
it's dangerous. It's a blunt tool that all that effective and is very dangerous. You've been very critical about the rate rises in Australia. I mean, they're sending the economy into recession to combat inflation, and it's not particularly combating inflation either.
No, well, I mean, the problem is,
well, we're seeing signs of it, obviously, but it wasn't an inflationary crisis that was based on demand. It was one that was based on, what happened obviously through COVID, the war in Ukraine. So it was on the supply side where a lot of it was out of control, out of people's control. There's a lot of criticism as to how this has been handled.
Yeah, and look, to be fair to the RBA, I'm not defending the RBA. I'm not a huge fan, but the part of it is because, a lot of it is because governments around the world, and the Australian government in particular, has outsourced the economic management to the RBA. Has got one instrument. So, I'd argue from the outset that you get a much better job of lowering inflation by smashing the energy cartel. I think I talked about this with you last time. So one of the key drivers of inflation is the fact that energy prices have soared.
Yes. On
the back of the fact that Australia is in this perverse situation where we are the Saudi Arabia of gas, which is the key driver of electricity prices, sets the electricity price in the margin. And also, if you're a Victorian, you heat your home with gas, and a lot of people cook with gas for a lot of households. So despite the fact that we're the Saudi Arabia of gas, we've somehow let our prices domestically be set by the world price, because we export about 80% of it. And we've let basically foreign-owned gas cartels basically jack up prices domestically and then create this artificial shortage while they pump most of it overseas to China. And the counterfactual is WA, which has got a separate gas market, and they reserve 15% of their gas for domestic use, and they have the world's cheapest gas prices and therefore cheap electricity prices. So we could have easily done that, and the federal government could have come in and sure, they've done the $12 gas price cap, which doesn't even kick in yet, kicks in at the end of this month, but the electricity prices are set forward. So we've already got a 30% price rise in electricity baked in for this year, and gas prices are going to go up because it's based on last year's prices. And because of that, we've got basically hyperinflation in energy prices in Australia across not just households, but, firms, manufacturers, all this sort of stuff. And that's directly feeding our inflationary pressures. So not that there's your first round effect where your power bill goes up by a lot, which is inflation. But then there's also second round where businesses and everyone else pass on those costs in their prices. So you get second round impacts. Now, the thing about it is you can blame the RBA for having one instrument, but if the federal government is not going to do its job, is not going to smash the energy cartel, is not going to give us cheap domestic energy, which it could easily do, but it's too afraid to annoy Shell and Origin and Santos and these other firms, which despite Origin and Santos supposedly being Australian companies, are actually 95% foreign owned. Because they don't want to hurt, interrupt them and put them offside.
Yeah.
They're not willing to fix the energy inflation problem, which is one of the main drivers of our problem. Obviously there's the inflation from all the goods we purchase have gone up in price from overseas, but that's all supply side. But the stuff that we could impact domestically, the biggest impact is energy. And the federal government is not helping the RBA out. And that is feeding our inflation problem. Same time, ramping immigration to record high levels. You got rents going through the roof. Well, guess what? Rents comprise 6% of the CPI basket. So that means that the government is also driving up inflation through the rental market via immigration. So you got the federal government working at cross purposes with the RBA. So yeah, look, I think the rate rises we've had so far have been too far. It could have been done differently, I guess is what I've been saying. But in order to do it differently, you have to have a federal government that's prepared to do its job. And unfortunately, governments in Australia have refused to do the job for too long, and they just hand it all to the RBA. He's got one instrument, and this one flat instrument only hurts 1/3 of households basically, because 1/3 of households rent, So they get hurt indirectly. So obviously if mortgage rates rise, investors are more likely to jack up rents, especially with the pricing power like they do at the moment. But interest rates directly only impact those with mortgages. And that's about a third of households. So those who, the older generation who's basically owns their house, are not renting, are sitting pretty, especially if you're on, I'm not saying if you're on the pension, you're rich or anything. I'm not saying that, but at least if you're on the pension, your income gets indexed to inflation. So your income goes up with the inflation rate. Workers aren't getting that. If you're a renter, you're getting absolutely slammed on rents, and that's indirectly getting impacted through the immigration side and landlords passing on higher prices because they can, because they've got pricing power. But the people who are directly impacted from interest rate rises are mortgage holders. That's only about a third of households. So you really got this blunt tool that's directly impacting a third of households in order to get inflation down. It's pretty stupid. It's very indirect. It's not a surgical strike. And if we wanted a surgical strike, the federal government really needs to do it through fiscal policy or through, smashing the gas cartel, etc.
Correct.
And they're not doing it.
Because we know they won't, but and who are the real winners? And the real winners are the banks that are rocketing in record profits. So
well, pretty much all the corporate sector. I mean, the
once again, based around the real estate market.
Well, it's basically the oligopoly economy that's dominating. So you got the property cartel. Same with pretty much anyone on the corporate side that's big. So I'm talking about big business. I'm talking about your corner store or whatever. But the big business has been raking in record profits. So this whole argument that our wages are driving inflation, which you read all the time. Oh, worried about a wage price spiral. The RBA keeps writing it. We don't have a wage price spiral. We've got a profit price spiral, and we're seeing it right across the board. Supermarkets, record profits. The energy, the biggest, like that's the biggest profiteer, Cartelia. We've just talked about it for the last 5 minutes. But those guys are making record profits, which are going offshore mostly, while they gouge us. And so if you want to solve the inflation problem, you got to hit those areas. You don't go and hit, mortgage holders. Hitting them isn't going to solve the problem.
Exactly.
Anyway, that's
it's not actually
no, it's not the way it works, unfortunately.
What's happening, but well explained, and I think it's really useful for you to kind of set that out, because people don't realize, it comes around to election time and they think that we're changing government. We're not changing government. It's the same government with a different avatar. That the
and as I said earlier, some ways they're worse. So it's like I don't want to play like I hate both of them. So I'm not like a coalition shill or a Labor shill. I just don't like either of them. But the one thing that gets me about the Labor government is that they're just basically the coalition. They're just as neoliberal as the coalition in a lot of ways.
Very far from where they started.
Yeah, that's right. We've got a fake Liberal Party and a fake Labor Party. Like they're completely anti-Labor in a lot of ways. But the difference is, like I always, this is going to probably rile up some people, but I've always thought of the coalition as like the criminals, right? So they're like, nobody likes a criminal, whereas Labor, because they're scummy, they're a bit corrupt, all that sort of stuff, but that's what they are, because they don't sort of try and hide it, or if they do, they hide it so badly that it's so obvious. Labor are like the corrupt cops, so they come off and they smile and all this sort of stuff, and they knife you in the back. And in some ways, I find that even more repulsive, because they're at least the coalition's semi honest about it. And I'd rather, if there's a criminal and they're a criminal, at least you know what they are. But if you got someone who's pretending to be your friend while they shaft you, that's even worse to me. And that's kind of how I viewed the Albanese government, especially when it comes to the immigration thing.
To help the downgraded and
every time I see Albo crap on about how he's brought up in a public home and this sort of stuff, and I'm like this, I'm looking after. It's like, mate, you're doing the complete opposite of looking after the whilst you bring in the record number of people into this country and create worse than the housing crisis that you tend to care about, and push more people into homelessness and create even bigger shortages of public housing. You then want to crap on about how you're brought up in a public home. Well, that's great, mate. But if you existed now, you'd be in trouble.
But because I was going to say, as you say, it's been going on for years. I mean, I remember writing years ago with Malcolm Turnbull, who would go and do the CEO sleep out. Yeah. A sleep out for one night,
It's all virtual signaling. Everything nowadays is virtual signaling.
The problem, so
yeah.
You'll go and support the charities that assist the problem. Yeah, I mean, it's really depressing. I think comes back to what we were talking about.
Yeah, well, we had Scotty for marketing, and now we've got Albo, who's like Albo for marketing. It's the same thing, like the same, like this housing future fund thing that I read about. Like Cameron Murray ripped it apart, beautiful.
Yes, yeah,
last week in his thing. You got this. It's straight out of Utopia, or Hollow Man. Like it's just spin. It's all spin. Like they're going to build. We're going to invest in this fund that if it makes a profit, we're going to invest the money from that profit into public homes, and we're going to create 30,000 homes over 5 years or something. It's like, okay, so we're going to create 6,000 homes a year while you increase immigration by 300, 400, 500,000 people a year. Okay, yeah, good one, Albo. Thanks, mate. That's going to really solve the problem there, buddy. It's going to get worse. You're basically failing upwards. You're making the problem worse while you're pretending to fix the problem. And this is what I hate every year with governments. They always go, oh, every year it's like we're investing a record amount of money in hospitals, a record amount of money in schools, a record amount of money in pick your whatever. So, well, you bloody hope so. A, we've got inflation. B, we've got population growing by 1.5 to 2% every year. So you need to be doing a record amount. Otherwise, we're going backwards. But they never talk about that. They're never honest about that. It's always, they just put out some number that's like, 1% higher than last year. And see, we're doing a record amount, yet it never keeps up with what the population growth. And this has been going on for decades.
Yeah, and that's what I was saying at the beginning. You've been writing about this for decades, and anybody that wants to understand how the economy works, I would recommend they go and have a look at your blog. It's not really, I mean, it's just like one of the best economic websites for telling the truth that is out.
Well, I mean, I think that's it. Like whether or not you agree with me or not, at least I'll confront issues that the mainstream media won't. And this is, look, I don't get a lot of stuff wrong, just like everyone else, but the fact of the matter is I'm at least willing to discuss this stuff, right? The mainstream media, like the hilarious thing is the Australian Population Research Institute does the best survey once a year on attitudes towards immigration, for example. And just like every other year, they released it about a week ago or a week and a half ago. And it said 2/3 of people, don't want to return to pre-COVID levels of immigration. 2/3 of people don't want Australia's population to keep rising. They did all this sorts of stuff. Non-English speaking background Australians feel the same way as everyone else. So it's not just a whole, oh, you're racist thing. But they feel the same way. They don't want it either. The only people who discussed this in the whole media, so it got released, was Macro Business. I did a real detailed report on it. And Herald Sun did one short article on it. And that's it. It went silent everywhere because it didn't fit the narrative. It doesn't, because the AFR wants big Australia. In fact, the Murdoch press, everyone always attacks the Murdoch press. They're the ones who are the only ones who ever discuss this stuff. They're actually more honest in a lot of ways, but the ABC didn't touch it. The Guardian didn't touch it. The wokesters at the Guardian, open borders nuts, didn't touch this. I don't think New Daily touched it. So all the left-leaning media didn't even mention this report, despite the fact it's the most detailed report that comes out every year and on Australia's attitudes. And, of course, when you've got the media doing that, the government's just going to keep doing what it wants because it's not being held to account. So at least at Macro Business, whether you agree with it or not, we at least discuss this stuff and discuss it daily. And the reason why I go so hard on it is because it's not getting discussed anywhere. So I'm basically like just shouting from the rooftop this stuff every day. And at the moment, it's mostly centered around the rental crisis. So there's heaps of articles on the rental crisis, but they never ever mention the true cause. It's always other stuff.
Yes, that's right. Well, I mean, the thing is with the mainstream headlines is they're just trying to, it's a clickbait. So we'll find a family that's in distress, highlight about how much they are in distress, and then that's basically the article.
But they often do talk about solutions, but it's always I've got to boost supply. So it's like, yeah, but it's never build enough.
We just need to build more accommodation. I've heard many real estate agents say that.
It's like how we haven't done it for 20 years. Like the population growth rocketed in about 2005, and it's been high ever since, except for the 1.5 years over COVID, and we never managed to build enough. It's like, well, that's all the empirical evidence you need. We didn't do it then. So to magically think that you can ramp it up even more than we did in that 15-year period, and we're going to magically fix the housing shortage, it's just laughable. It doesn't pass the laugh test. It doesn't pass the empirical data we've had for 15 years that showed you we couldn't do it. And, but they don't discuss it. It's like, it's every other solution on the side. Oh, I've got to build to rent. We've got to do this. It's always a way. It's always something that benefits the property industry. Or the people who are financing the property industry. Like, there's always a way for someone to make a buck out of this. It's not about actually just not creating the problem in the first place by not importing so many people, which is a logical thing to do. Like, if you've got something causing a shortage, well, maybe you should stop doing that as much, and then you won't have as big a shortage. It's not rocket science.
It's not rocket science.
It's just like, but
having said that, of course, the one thing that we need to end on for my readers, regardless, is that if you're going to invest anywhere based on the policies that we've got at the moment, the land market is a pretty safe bet.
Absolutely. Now, I often like, sometimes people say, "Oh, you're selling out," because I don't write as feverishly against negative gearing and stuff, because that whole debate has passed. Right, it's not going to happen now. Right, so it's dead, buried, cremated. As use old John Howard thing, right? And
it's relevant when rents are rocketing upwards.
Yeah, exactly. I mean, it's like, so the whole thing is, it's like, but if you want to be honest about it and you go, well, this is what we've got, and I think it's ridiculous we've got this, and we shouldn't have this, but this is the policy settings we got. Well, if you want to make money out of it, you got to invest in a way that aligns with what they're doing, whether you agree with it or not, which I don't agree with it. But so go long property. I mean, especially if the RBA is about to get the top of the interest rate cycle, which it looks pretty likely now, especially after the Silicon Valley Bank fiasco. And if it's going to start cutting rates, and you're going to get APRA then reducing the mortgage buffer, and then you've got all these fundamental drivers like the mass immigration, the rental market stuffed, and we're not going to have enough housing supply in the next few years because the costs have increased and a whole bunch of builders are going bust. It's a no-brainer if you want to make money. So, okay, maybe I'm facilitating the Ponzi, I don't know, but
you've become a specufester.
But it's just it's a system we've got, and look, I spent 12 years fighting this stuff, and I still call it out, but it's like, after a while, it's like nothing's going to change, unfortunately, because that's the system we've got. And if anything, if COVID couldn't kill it, if COVID couldn't kill Big Australia, if that didn't give us a chance to reset policy, so we had 18 months of basically negative migration to very little. We could have rebalanced the immigration system coming out of it so that it was more sustainable and lower and better quality, right? Instead of just going for numbers.
Yes.
Instead, they've done the opposite. So if that couldn't fix it, it's not going to get fixed. And they're only going to double down. They're going to use this migration review that hasn't been released publicly yet as an excuse to double down even more and increase it even further. So we're going to get more of this, and it's going to be worse. So in which case it's like, well, it's a no-brainer. And, if you're someone who's not looking to invest, but you just want to buy, who the hell wants to be stuck in the rental market? I mean, you got terrible, like you got really short-term rentals in Australia as the norm, 12 months. You're in a precarious situation. There's still the problem where you can't do what you want with the property, all that sort of stuff. It's not like Europe, some of the European nations. So who can blame people for jumping in and wanting to buy a house so they don't have to move every couple of years, and they're not at the whims of their landlord? Just the way it is. So yeah, if you're, it's probably going to be easier buying soon than it will be next year. Even if rates fall, like, you better borrow more, but you'll be paying way more because prices will be rocketing.
Yeah.
That's all.
I mean, I've been saying that for a while. I mean, people don't understand, but unfortunately, the housing, as I said, the economy is choreographed around the housing market.
It is.
That I give the advice that I do is not because we like the system, but because we are subject to the system that we live in. And if you want to make money, which we have to do, you need to know where to invest, how to invest, and you need to understand that there is a cycle to it, and you don't want to be buying when everyone else is buying. So
no, it's a classic example. Like if you bought in late 2021 or early 2022, actually one of my friends, actually, like he was an investor, but he, classic situation. He had growing family apartment, wasn't big enough, like 4 people in a 2-bedroom apartment during lockdown. So he sold that, got a bit more than he was expecting, but then he was the underbidder for like the next year in Melbourne. Just kept missing out on homes as the prices kept rocketing. He eventually got one in like February 2022. And then, of course, you know, it settled in like March or whatever, or late March, April. And then obviously market fell, interest rates rocketed, you know, classic example of wrong place, wrong time sort of thing. But, you know, he you know, that was a classic, you know, time the market poorly, but he wasn't trying to invest. He was just trying to put a roof over his head and he was sick of renting for that year. So, but there's a, you know, you'd be better off buying now than you would be buying around about that time.
Yes.
Yeah. Especially I mean, when we know the forces that are coming.
Time in the market is, of course, is what my service is all about. You know, if you'd have gotten at the beginning of 2020, you'd have been sitting pretty by the time you got in 2022. And it's a little bit the same now with what we're seeing coming ahead. But we're going to have to wrap up the, I don't know how long we've gone on for. We've gone on for a little bit. Oh,
sorry, I've just been ranting. I like to, whether it's this.
You're welcome to rant.
Whether it's this or it's Martin North's show, I do Martin North's every 6 weeks or something on Tuesday night, and it ends up being 2 hours of just like this, just free flow rant.
We'll see how many people manage to get through it, but I'm really grateful for you coming on. Thanks so much, Leith.
No worries, Catherine, anytime.
Have you on again, and yeah, keep an eye on what happens and see whether the forecasts play out. Yeah, well, I mean, don't listen to my forecast. We're wrong again on this one. Looks like the Cook's looking pretty good though. Good on him. Yeah, I don't know. We'll soon see. We'll soon see. Yeah, who cares? It's all fun. Or watching Chris Joy's forecast play out. I know where my money lies, but we'll see how things go ahead. But look, thanks so much, Leith. No worries. And I've got to say though, hats off to the Cook though. If he's right, good on him. Like he, you know, mate, he had some cojones making that call, and I thought it was crazy. So if you listen to this, Kooky, if you get this right, mate, good on you. That's all I can say. Hats off to you. Nice one. Thanks so much, Leith. No worries. Yeah, we'll talk soon. All right. See you, Catherine.